afternoon, and to some of you, good morning still, and to others, good evening, and thanks for sharing your dinner with us today. My name is Ken Coghill. I'm the Head of Operational and Technology Risk Supervision at the Dubai Financial Services Authority. Welcome to day one of RegTech Live, Driving Innovation Through Compliance. Today will be a mix of presentations, demonstrations, and discussions, and I'll be your guide throughout the session. We're going to start off with some opening remarks today from the DFSA. We'll then hear a keynote speaker on the developments in innovation. We'll then move into a demonstration session where you'll hear from 4 different solution providers that provide eKYC and digital onboarding solutions. We'll then have a panel discussion on eKYC and digital onboarding from a regulatory and a business side perspective. And then we'll finish up with a few closing remarks from the DFSA. There will be opportunities for you throughout the session to ask questions. If you have a question, you can type it in where you see the question mark. It should be on the right-hand side of your screen. If you're on a mobile device, that question mark will be in the tray at the lower edge of your screen. There's 600 people registered for the event, so we won't be able to get to everyone's question, but we will do our best to get through to as many questions as we can. Many of them may be answered privately. Those that we believe have a broad interest to the broader group, we will read those out as we're able to do that. We're going to run for 2.5 hours straight through today. There won't be a break, so if you need to excuse yourself, please do so. We won't be offended. We won't actually even be able to see you do it. So you're welcome. Get a snack. Welcome to get up, get a snack and a drink. Please make yourself comfortable. That's our summary for the day. I'm not going to take up any more of your time. There are far more important people queued up behind me ready to speak to you. So to get us started with some opening remarks, I'm going to invite Brian Steyerwalt. He is the Chief Executive of the DFSA to give you some opening remarks. Brian, I'll hand the floor over to you.
Great. I hope everyone can hear me, and thank you very much, Ken, and good afternoon, or as Ken said, good morning, good afternoon, and good evening, and welcome to the RegTech Live event. I want to thank everyone really for making the time to join us today. I'm sorry that we're not able to meet in person, but also very happy that we can host an event through this venue that brings us together in a larger audience than we would have normally had in an auditorium. So there is a silver lining to today's event. As you can see from my background behind my head, we have begun a gradual return to our offices at the DFSA. The Dubai government began reopening their offices and processes this week, and I'm a live example of the return to the office. We are returning gradually. We are returning safely with the health and safety of our staff at heart, but we will move forward on this together. Until we are able to hold an in-person meeting again, events like this are a fantastic way for all of us to bridge the gap, stay connected, and keep moving forward. And importantly, this is a new way for us to use technology in financial services. We are certainly living in unprecedented times. This statement has never been more true than it is right now. I am proud of the way the UAE government has responded to this crisis, particularly with the devotion to health and safety of the population here. And in many ways, through their devotion to technological advances in the healthcare industry. As this crisis is unprecedented, so is the necessary response. I am also amazed at the operational resilience that we have seen in moving financial services to a remote working environment. Where we once asked, how many people should we allow to work from home? We are now asking, how many people do we need to work in the office? Remote working is a permanent part of our future work environment, but teams still form better and function better in person. We will not be a fully remote organization in the future, but it will be part of our future work environment. Over the course of many years, many say since the start of the invention of the ATM card, technology has changed the way financial institutions offer their services. This trend has also brought about changes in compliance and changes in the way regulators supervise financial institutions. And this trend has accelerated beyond anyone's expectations this year. The pandemic has demanded that financial institutions and their regulators hyper-accelerate their digital transformation. The DFSA is proud to be a leader in this movement. We too have had to make significant and necessary changes to ensure that we continue to be effective in meeting our regulatory objectives. We've moved quickly to understand what impact the current events are having on financial institutions and to understand where we need to adjust regulatory requirements in order to enable financial institutions to adopt new technologies. We are balancing this against maintaining appropriate protections for clients and markets. And it's an important point, I think, in that we embrace FinTech and RegTech as part of the future of finance. But we do this in our role as a regulator in protecting clients. Being agile and being flexible as a regulator does not mean ignoring our principles. Competing on lack of regulation is a path toward disaster. We've learned that from the past. Short-term gain of innovation will be long-term pain if not done properly. And events like this will ensure that we're moving along the lines of proper implementation. In the post-financial crisis years, financial institutions engaged in digital transformation because they chose to. This choice was about increasing operational and market efficiency and enhancing the customer experience, all to remain competitive against traditional competitors and against the new competitors from the FinTech world. In 2020, financial institutions are not engaging in digital transformation because they chose to, they're engaging because they must. Operational resilience has become a new competitive landscape. Institutions that are not keeping up with technological advances today are fast on their way to becoming institutions of yesterday. As an example of rapid change, on the 5th of May, the DFSA, along with the Central Bank of the UAE, the FSRA of ADGM, the Securities and Commodities Authority, the Insurance Authority, the Ministry of Justice, and the Ministry of Economy issued joint guidance on the treatment of financial crime risks and obligations in the UAE in the context of the COVID-19 crisis. This is not only important as all regulators in the UAE work together for a common goal, but also the purpose of the joint guidance was to encourage financial institutions to use technology to assist with the collection and verification of customer identity. In short, we encourage firms to use digital identity solutions. In the joint guidance, we also encourage firms to pay careful attention to transactions and to look for new patterns of suspicious behavior amongst the new normal we find ourselves now in. Although technology brings enormous potential benefits to the delivery of financial services and the reduction of risk in financial services, it also brings new risks that we have to consider. In a recent study conducted by FinScan Consulting Services, just released in May, the top challenge during the pandemic is the need to work from home while lacking the proper technology and access to internal IT systems required to support this working protocol. In addition, many organizations felt that their exposure to risk increased as their normal compliance controls have been compromised due to remote working conditions. Inadequate IT support for remote access, lack of proper due diligence on new business opportunities, and the speed in which the organizations had to adjust to the new normal. These are all areas that concern us as well. The majority of respondents to this study also expected criminal activity would rise during this environment. Indeed, the world has seen a marked increase in phishing attempts and cyber attacks very recently. Working from home, for example, affects an institution's cyber risks through increased exposure to remote networks and increases in electronic communication between staff and between staff and their clients. Working from home can distance client-facing staff from the watchful eye of compliance, and the isolation that can result from continued working from home can erode the positive intercompany culture and values that companies reinforce through traditional staff engagement. And finally, restrictions on movement made it more difficult to have face-to-face engagement with prospective clients to verify their identity, their place of residence, their place of business, and generally to apply the human element of AML and financial crime risk that a client may present to an institution. Most importantly, the respondents to this study mentioned above highlighted that digitalization of compliance functions is one of the key areas of improvement needed to better prepare for the future of finance. And that is precisely what brings us here today with this remarkable group of speakers and panelists that we have assembled for this very timely event. The DFSA wants to be at the forefront of the future of finance, and the DIFC is ready to provide that environment for you to join. We join closely with the DIFC on this area of future strategy and development, and we look forward to being an integral cog in the future of Dubai. I never underestimate the entrepreneurial spirit of Dubai, and nowhere is entrepreneurial spirit more alive than in RegTech solutions. I also have no doubt that innovation and technology will be critical to our emergence from the COVID-19 era. A change is certainly not easy, and it raises many questions. What technologies are available? What technologies best fit my organization? And probably the most important question on the minds of senior management at every financial institution is, what are the regulators' views of different technologies? This event is about regulatory compliance technology, where it is today, where it is going, and what the regulatory considerations are. The purpose of these 2 days is to generate awareness of available technologies, to demonstrate the DFSA's and the DIFC's support for development and implementation of regulatory technologies. Today's event will focus on digital onboarding. You will hear from industry experts. You'll see several demonstrations of digital onboarding solutions. Tomorrow's event will focus on transaction monitoring and more broadly on regulatory compliance. You'll hear trends in the adoption of technology and regulatory compliance and see demonstrations from providers of transaction monitoring solutions. Our intent is not to promote any single vendor or technology. Rather, our intention is to make you aware of what is available and to promote the consideration of technologies that you'll hear over the 2 days. I'm going to leave you with one final set of thoughts. The market often accuses regulators of being resistant to change. I do not think that is true today, and I know that is not true of the DFSA. Regulators have the difficult job of taking an objective approach to technology. We are not here to eliminate risk. I cannot emphasize that enough. With full support, and we fully support and encourage the use of technology in the delivery of financial services, as well as in the risk management of those services and in the maintenance of regulatory compliance. But, and there's always a but, we do not encourage or support any innovation that comes at the expense of client protections, market integrity, or financial stability. While our regulatory requirements may be more flexible and adaptive to support new technology, our regulatory objectives are not flexible, and they do not adapt to new technology. Technologies may change our role, but our objectives remain the same. And those are protecting direct and indirect users of financial services, balancing fairness, transparency, and efficiency in the market, maintaining financial stability, and protecting the reputation of the financial services industry. Managing all these objectives takes some juggling. Fortunately, we like to juggle, and we are willing to listen. It is through industry engagement just like this that we develop our regulatory understanding of available and emerging technologies. We may be a seemingly cynical group of people, but we're not that cynical. We actually get paid for having a glass half empty view of the world. We look at activities in which a financial institution engages, and we ask what could go wrong. If it does go wrong, what will be the harm to the consumers, the market, and the reputation of the center, and particularly of financial stability? It is through that lens that we approach all new financial services technologies. It's not a lens of resistance. It's a lens of caution and concern against those regulatory objectives. So I thank you very much for listening to me today. And I'm now going to turn over to our keynote speaker from Onfido. So I'd like to introduce to you Mr. Hussein Kasai. He's the co-founder and CEO of Onfido. Onfido was founded in 2012 to help businesses digitally onboard users by verifying any government ID and comparing it with a person's facial biometrics. Hussein is a World Economic Forum tech pioneer, a Forbes contributor, a Forbes 30 under 30 member. He has a BA in Economics and Management from Keble College in Oxford. And Hussein will set the stage for us today and how the industry is developing in regard to digital onboarding. So Hussein, I'll turn it over to you. Welcome, and welcome to everybody. Thank you very much.
Thank you very much, Brian. I hope everyone, you can see me okay and that you are well. So it is great to be on and to get this opportunity to speak with you. I am going to spend around 15 or so minutes sharing a little bit about onboarding, digital innovation, the drivers for it, and more specifically, trends that in our view are happening more broadly. And we do have some time for questions, so do feel free to drop in your questions, and I will try to get to as many as possible towards the end. So with that, to get started, following up on what Brian was sharing, I'm one of the 3 co-founders and the CEO at Onfido. We founded the company 8 years ago. I did so with 2 co-founders, and we're now a team of just over 400 people. We've raised about $200 million, and we service about 1,500 businesses globally, 2/3 of which are in the financial services sector. And we did so because we could see that there was a big need for it, and that there are a few things that were happening that we could see needed a solution for. One was around money laundering, and that is used in human trafficking, drug trafficking, terrorist financing, and so on. And according to the United Nations, up to 5% of the world GDP is laundered money, and that's almost $2 trillion. And what is perhaps an even more surprising statistic is that, again, according to the United Nations, up to 99% of laundered money goes undetected. So it's less than 1% is detected. And that puts regulators, as Brian was sharing, in a difficult position, in that the intention with most regulators is to encourage innovation, while at the same time ensuring it doesn't come at the cost of consumers and fraud and things of that nature. And it's not always an easy balance to be had, and it's an area that we can get into a little bit more. But the FSA in the UK, MSA in Singapore, where there are, in our view as a company, regulators that are fostering a very healthy ecosystem, they tend to get the right balance between competition, innovation, and sort of protection of the consumers. And it's not necessarily easy. There are at times regulators which purely have a focus on consumer protection, and that is a laudable and an understandable sort of goal. The challenge becomes, you can achieve that objective by stopping all innovation. If you just freeze innovation and have no new experimentation of anything, you can protect the consumer. So there's a balance to be had in that, encouraging new innovation while stopping bad actors and while stopping any sort of consumer protection risks. So the challenge is part of the context is, in a world where money laundering is on the rise and crime is on the rise, yet consumers want to gain access to services digitally. And so in our space, in identity, trust is naturally needed for any transaction to work. And 8 years ago, when we looked at this space and how it was done, it essentially came down to 2 options. One was for businesses to verify the identities of the people that are onboarding in person, such as you going inside a bank branch, as I'm sure we all have, figuring out what paper documentation you have and having a physical face-to-face verification with a person. The second, historically, has been to rely on centralized databases, typically credit bureaus, which have served an important function historically. But in more recent times, given the data breaches, the data that is held by these centralized databases are often accessible to fraudsters and bad actors, which has meant that it's lost its currency to some extent in reducing the money laundering and fraud challenge. So we could see that on the in-person option, that's not convenient as such. And on the database or credit bureau option, it doesn't have as much security as it could do. And secondly, it excludes half the world's adult population, in that over 2 billion adults globally don't have are underbanked or unbanked, and therefore not on a credit bureau, and therefore can't access these financial services. But that's the way that we could see that a new way is needed, and that identity underpins, in our view, all transactions, and that it could be done in a much more effective way. And the approach that we have taken is you use a government ID and your facial biometrics to be onboarded. So let's say you're an online remittance platform like Remitly, for instance. As you're onboarding individuals at the point of registration, whether it's on an app or a browser, the individual is asked to take a photo of their government ID, like a driving license, and a short selfie video. And then behind the scenes, we're using machine learning to verify it's a genuine ID and that the face matches the photo. And there'll be a presentation a little bit later today to just show how the technology works on that front. But the approach is to get the best of all worlds, and that's it's much more convenient than going for a face-to-face in-branch experience. And in parallel, it's much more secure than centralized databases because it's harder for fraudsters to cheat your government ID and your facial biometrics. And thirdly, the intention is to give access to more people so that you're not restricted to only those who have access to a physical branch or that are on a credit bureau, but anyone in the world, as long as they have a government ID and a camera-enabled device, can be onboarded. So the different technological building blocks came together to make that happen. And that in part leads me on to the points around trends. So we have seen in the last 5-10 years and longer, the rise of a new digital economy. And most organizations globally have a digital growth plan. So if we were to take a look at some of the key fintech trends and how these all are connected, the first one in sort of our view is the user experience fundamentally. And this started, I would say, perhaps 20 years ago. What led to the biggest drive for the user experience at first were some websites, specifically MySpace and sort of more recently or later it was Facebook, where consumers started getting used to a user interface friendly approach. And that became the norm to them, especially with millennials and the smartphone generation. Most of the smartphone generation from the age of 10, they're used to iPhones or smartphones, and they're used to interfaces that are very much user friendly. So when it turned around 5 years ago to financial services, the first wave of fintechs, especially on the online banking side, they sort of could see that the traditional mainstream banking experience is mostly reliant on older technologies, and that the smartphone generation in particular, as they are looking to consume financial services, they are much more used to and prefer now more digitally native, and so they prefer a stronger experience. And the building blocks suddenly became available to make that happen. Those building blocks include smartphones becoming a lot more accessible, internet connectivity improving, making it possible for a small company to offer financial services. For instance, having specific licenses just for payments or just for remittance. You don't need a full banking license to be able to offer those. Or servers becoming a lot more accessible and affordable so that a small company could actually, without needing too much financial capital to get started. And naturally, the role that we played, where we become relevant, is as a digitally native or purely online business, such as an online bank, you need to be able to verify that the people you are onboarding, they are who they claim to be, and to do so in a secure, scalable, and trusted way. And that's how the two are connected. So us as a RegTech, as we started to grow, we started to help more and more online businesses onboard people digitally in a user-friendly way and securely. And at the same time, the fintech rise had a strong need for that. And so the rise of the RegTechs and the rise of the fintechs are connected in the sense that fintechs are looking to scale, but in a lean way. And RegTechs are translating what the regulators require, but enabling that to be done in a scalable way. And that's how the two come together. And that's what's given to the rise of the first fintech wave, in our view, being specifically the user experience one. And as we've seen in more recent times, mainstream banks and other financial institutions have learned from that and are starting to adopt those best practices, so that it's in some ways a win-win. Consumers are better off. Now they are getting a better user experience. There's a whole wave of fintechs that are new businesses and innovative that have started, and you have the mainstream banks that are innovating and learning a bit more about how to cater to the new customer base. And the regulators in the middle of all of this they saw the need for change and how new technological building blocks are enabling change, and having this approach of collaboration has helped make sure it's done in a healthy way to make it a win-win. Second is the underserviced and underserved specifically. So as I mentioned, the older technologies had this challenge of not being able to cater to those who are underbanked and unbanked. And this became an issue mostly of customer acquisition cost. The mainstream bank would like to offer their services to as many people as possible. The challenge is that if someone has a very low spending potential, then if it's going to cost the bank $20 to onboard that individual, then they would only be able to offer their services to the upper ends of the pyramid. Whereas fintechs came in a very lean way and significantly lowered their costs to be able to offer their services. And therefore that made it possible for them to offer their services to the bottom of the pyramid. If you consider a online bank like Monzo, who publish their sort of statistics and research and so on, compared to a typical $400 cost for an annual sort of running an account, if they're reducing it to sub $100, that actually means it's a lot more economically viable to be able to offer the services to the bottom of the pyramid. And equally, it's not just financial services in the banking sense, it's also microloans and a whole host of other things that we've seen as a result of those who are underserviced and underserved being able to gain access to services. And if there's a third trend to cover in a relatively short time that we have, in all likelihood, it's going to evolve into a more personalized experience. And this has been a long time coming, and we already have a great extent of personalization in a range of different things. But as the consumer focus intensifies, it seems as though that part of the next natural trend is likely to be get organizations and fintechs getting to be able to, in a scalable way, know the individual needs much more effectively and be able to offer the best services to them, whether that is from a robo-advisory side, from a lending perspective, and so on and so forth. So the greater the data that there is, the more ability a consumer can be given sort of services that are tailor-made to them. And back to the identity in that our focus and on the digital onboarding, we in parallel have gone through our transition in that historically the identity process has predominantly been in person, and then it turned into sort of the credit bureaus, and then more recently us and a few peers, we are focused on taking your offline identity online using your government ID and your facial biometrics. And in our view, the next natural transition is also going right down to the consumer, in the sense that empowering consumers to own and control their real identity and their legal identity, and then the consumer could decide to provision access to the others in a way that is user-friendly, secure, and most importantly has privacy at the heart of it. In that the intention is for no private business to have to store or hold your personal data, such as a copy of your passport, for instance. And the only person that can really do so in a trusted way is the individual themselves. So that if the individual were to be given the option and the opportunity to hold their own personal private data, but to grant access to other organizations that need to know that the person is who they claim to be, then that might make the trade-off better still. So with that, I believe I'm coming up to the end of my time here. We do have time for questions if anyone has any and would like to ask any. And just as I wait, in case anyone has any questions in the final minutes, the extent to which innovation is related and likely to change as a result of COVID-19, there are some trends. The broad trends are infrastructure companies more broadly, whether it's communication-based, payments-based, in our space of identity, we have all kind of seen a significant rise. More importantly, across the world, most organizations which have had a digitization strategy are bringing those forward. And some pockets that we are seeing as far as different industries specifically go, the activity seems to be that cashless societies are going to become more common, especially in emerging markets, whereas kind of there's now an additional hygiene and virus risk that comes with touching IDs, not just IDs, but paper-based money, and therefore digitization is going to increase. Secondly, is digital access to services. in a physical sense. So as you go through an airport, not having to go through as many touch points of sharing paper-based documentation, or as you're checking into a hotel, doing so ideally with a smartphone and not necessarily having to have close proximity to services and things of that nature. So I have a few questions that have come in. So we have a question here. With regards to the digital identification, a key element to that, as advised by FATF, is the ability to authenticate information or validate from a government authority. How is this assured by Onfido? So there are a number of standards and protocols globally. The essence of, as far as most standards and most regulators require, is that you can uniquely identify that person as predominantly their date of birth, name, and address, and that you use some sources, and those sources can differ based on the different countries. Government IDs is typically included in that, and the way that you can assure that the government ID is genuine, there'll be a presentation later that shows the technology that is used, but ultimately there are internal parity checks that ensure that it's valid and issued by those relevant government authorities. And secondly, once you develop machine learning based technologies that has seen tens of millions of these IDs, the models get really good at detecting which identity seems genuine and which one seems fake. That is a key way of doing that. If I was to take another question, how will institutions, trust individuals if we move to portable ID, i.e. the fourth trend in the presentation? Well, that also goes back to standards, and that we have, as a community, shown a really good, or set a good precedence of how you have private organizations in the form of fintechs, RegTech that supports fintechs, and then the regulator that is sort of observing. If there's a way to have a portable identity ecosystem that everyone benefits, the regulator would have to be heavily involved to make sure that it's a standard and that it all works. Ultimately, we already have a shared identity ecosystem. The credit bureau model is a shared identity ecosystem in that banks enroll individuals, they contribute data to the credit bureaus, and then other banks and other institutions rely on the same data. That is done currently, it's just aggregated via centralized databases. In a similar way, if it's individual based and driven, as far as the regulators involved, that would help. How does the regulator view the new identity KYC certification possibilities? Are we on the same page? That is a good question, i.e. are regulators on board with the new methods of digital onboarding? The answer is, broadly speaking, globally, yes. There are some regulators in some countries that are further behind. And it goes back to what their specific goals are. If the goal of the regulators is to protect consumers, they can naturally do that by stopping innovation. Whereas most who have seen the thriving fintech ecosystem, I'm going to point to the UK, given that we're sort of headquartered here, but naturally Singapore, increasingly in Dubai, you have the benefits of having regulators very much embedded in the community can be seen by all, not just the fintech community, but the broader economy and sort of the benefits that brings to trade. So in order to foster innovation, especially in financial services, digitization is a core part of that. And in order to enable digitization to be done effectively, we naturally need a healthy regulatory framework to do so. And that's why events such as this are key and help in doing that. So I've got another question. I'll make this the last one. How has my experience been as a company at Onfido in developing countries? What proportion of our business comes from developing countries? So by developing, we're specifically talking about emerging markets. I would say probably 20%, a fifth of the volumes that we see are from emerging markets. And so we have clients that are headquartered in 64 countries. Some of these clients are very small, but we go out of our way and we have a focus around not necessarily picking a select number of countries, but also there's the very much the long tail and in emerging markets as well, given that the more IDs that our machine learning models get, the more sophisticated they become and they help all of the clients. It's essentially our model. And as for how the experience has been, it's been naturally a good one. That the finer nuances and differences are what inhibits us or enables us. In part, firstly, is how many in that country have a government ID and have a good government ID. So the Aadhaar card scheme in India, for instance, has brought 1 billion people online in the last decade, which is naturally great, and there are more initiatives like that. So there are still 1.1 billion people in the world that don't have any form of documentation. There is a United Nations Sustainable Development Goal 16.9 to help everyone in the world have a physical identification card by the year 2030, which will help more. That's identification is one part of it. The second one is camera phone qualities, and that's improved as long as it's greater than 2 megapixels. That's great. And as we know, globally, smartphone penetration is on the rise. If there's a third and last one, it is around internet connectivity. And again, that is improving across the world. So all these trends tend to help. So with that, I want to thank you all. I'll stay here and I'll respond to some of the questions I didn't get around to on the chat. And I shall pass back on to the next presenter. Thank you.
Hussein, thank you very much for those insights. And as a regulator, I just want to thank you for mentioning the word regulator in the same sentence as saw the need for change and win-win situation. It's not often we get included in the concept of win-win. Before we move on to the next session, we're going to post a couple of poll questions for you. If you could answer these for us, they'll be up for about 30 seconds each. The first one is, does your business engage in digital onboarding? The next question that you'll see is going to be, how important is digital onboarding to your business? So while you're answering those, I'll explain what the next session is going to be. So coming up next, we have invited 4 providers of digital onboarding and eKYC solutions to demonstrate their solutions to you. They're certainly not the only providers in the market. We reached out to some of your peers, some of you who are listening today, and we asked first, what types of RegTech solution providers would you like to hear from? What solutions are you interested in? And then second, what are some of the names of some of the providers that you would like to hear from? So from those discussions, the 4 providers today were invited to and given the opportunity to present. Tomorrow you'll hear from 4 different providers with different types of solutions in a different regulatory compliance fashion. So the demonstrators that we have today, the 4 of them that we'll be presenting, Onfido you'll hear up first. Then after Onfido will be Finergo, Azikau, and Norblock. Each of the presenters will have 15 minutes to demonstrate their solution. Within that 15 minutes, they'll also have some time for questions, so please submit them if you have them. They'll answer them throughout the session or hold them off to the end. And when they're finished, if they don't get to all the questions, they will be able to continue to respond to you from behind the scenes. One thing I need to let you know before we begin this, we do have a disclaimer that I have to give to everyone, and I'll put that on the screen for just a moment. Please be aware that the participation of a demonstrator in this event does not in any way constitute a recommendation or an endorsement by the DFSA. The DFSA is not responsible on any basis whatsoever for information presented by demonstrators and has not reviewed or verified that information. So it's very important to note that we have not selected 4 that we think are the premier vendors that anyone should be using. We've reached out to the industry and we're given these names and we're giving them a platform to introduce themselves to you and for you to be aware of them. So with that, I'll introduce the first demonstrator, and we're back to Onfido. This time it will be Jimena Diaz. She is the VP for the Southern Europe, Middle East, and Africa region for Onfido. So, Jimena, over to you.
Hi, thank you very much. Thank you for the invitation, and thank you for all. I hope you can see my screen right now. Yes, I think so. So I hope everyone is okay and safe. So you heard the keynote from our CEO Hussein Kasai. Now I'm going to enter a little bit more in detail on what Onfido does and do a demonstration by a video. So let's go to the presentation. an overview on Hussein talk a little bit about it, but we have a great leadership team with Hussein and Iman, about the three founders of this company, but also a number of people coming from different backgrounds, fintech like PayPal, myself, or David Clark, our CFO, or Bain, Sonny, ForgeRock, coming more from the identity space. We are a team of 400 people around 9 offices around the world, which is quite big. We have people based in Europe, in the US, in New Delhi, in Asia, and addressing every different continent. On my side, as said, I'm the VP of CEMEA, which is Southern Europe, Middle East, and Africa, based in Paris. And normally traveling, but not now, as obviously as everyone, all of us around the world due to the COVID-19 period. So where are we? What is the next transformation? As Hussein explained it, we're going from the in-person identity to the identity 1.0, which was credit bureaus in the 20th century, and now to the identity verification before getting into the portable identity, where everyone will be able to have his own identity. We do that for a number of brands, more than 600 brands in 60 countries in 18 verticals. And as you can see, those verticals can go from finance, where we have 2/3 of our business, but also health, leisure, travel. Obviously, when you are renting a car or doing any type of car sharing, you need to make sure that the people that are driving those cars have a proper driving license. In the same way that when you're opening an account, you need to make sure that people have the and are the right person to open that account with their ID. The other vertical that we are addressing also is the institutions in different ways, and the public sector that can also need ID verification on, especially in this period where all the onboarding is doing online. Sorry. How do we do that? First of all, we check that we have a genuine ID, and we check that based on the photograph of the ID, front and back when it's needed, and or just front when we're talking about a passport. We check that in front of, and we compare that to the to a selfie or to a liveness, so a live video, where we're looking at not only the fact of having the right person, but also to have a real life human in front of us. What this means to our customers? First, it reduces risk. Why? Because obviously when you're checking fraud, you're definitely taking decrease the fraud rates. And there is a number of sectors in the fintech world, but also all over in other sectors that where fraud is very high. Cryptocurrencies or financial, AML, due to anti-money laundering laws. So you can see that whereas, for example, saw 72% of decrease in the fraud rate using Onfido. The second thing that you see is increase in conversion. The more you can onboard people quickly, the more you're able to increase the conversion and to get the person that you started the process to open an account or create and start a new experience with your company, to make sure that they get until the end of the process. Remitly, for example, saw 5 times more user verified and onboarding thanks to Onfido, or GetAround with a car sharing company, so 23% of increase in conversion at the onboarding stage. Finally, what is definitely one of the things that Onfido can allow our customers to do is scale globally. We are able to manage 4,500 documents all over the world, here meaning different type of documents and different generations of documents between sometimes paper documents to more to card documents. And we do that in 196 countries. Revolut, for example, was allowed to onboard users from 168 different countries in just 1 month. But let's pause and try to be the thief for a couple of minutes. And this is just for the experience, obviously, and not encouraging anyone to try this experience, but just for you to understand and to put ourselves in the mind of the people that are trying to break the rules. First of all, what we're going to try to check is that we have the document that is the document of the person that is showing us that document. So the facial similarity. Fraudsters will always try to take the a real document and compare it to another picture, a picture of themselves. The second case is, do we have, and for that, what they're gonna do is they're gonna try to show us the picture of a picture, the picture of another document, or the picture of a phone. We have a spoofing detections capabilities that allowed us to make sure that we're not in front of a genuine selfie, but we're in front of a picture of a picture of a picture of a phone. Same for the videos. We're in front of a real video or a video of a phone. The other thing they're going to try to do is swipe documents. You can see it in this video. So let's pause for a minute. On one side, we have the genuine document with the original face. And on the other side, we have somebody that is trying to take a picture of that passport, put in another face. We have the capability to see the difference, and we'll obviously highlight the fact that we have a physical swipe. The other thing that a fraudster would try to do is try to put a kind of mask in order to be able to do the video instead of the real owner of the document. You know, on the internet, unfortunately, you can find those kind of masks quite easily. So for that, the liveness detection, which is really used by a lot of our fintechs and a lot of banks, will allow us to check that we're not in front of any impersonation and any usage of masks. The fact that we're going to ask people to give us 3 digits plus turn the head. This is a combination that is going to change every time he's trying to do the video, which give us 4,000 different combinations, and obviously it's much more difficult to fraud, and it's going to allow us to see, well, this is not a super real mask, but it's going to allow us to see if somebody has a mask, because we're going to check on a number of elements. The other thing is, obviously, in order to make sure that we have a good document and to test and check a number of security elements of that document, we need to be in front of the original document present. And as you can see it in this video, and if we pause it, we have on one side the physical document, the real document, and on the other side, we're going to have a photo of a print or a photo of a screen, which we're definitely going to flag as potential frauds. Obviously, first, because on a print, you can easily work around a scan, and on a screen, you can probably get that picture from somebody else, but that doesn't mean that it's your document and you're in front of the real document. Finally, there are people that can do a physical counterfeit of a document in the dark web. But here's where we're going to check a number of things in the document itself. One of them is font. The fonts for every single document all over the world are very specific, country by country, and very difficult to counterfeit. So here's where you can check if you are in front of a real document or not. We're going to also check a number of correlations between the MRZ and other informations that are in the document. Fraudsters usually usually will change the name of a document, but will forget to change the MRZ. Where you do the counter check, you definitely understand that you're not in front of a real document. But sometimes it's hard. How do you see the difference? Where is this little dog? How do you see the difference between one picture of another one? Obviously, this is to make you laugh a little bit, but the reality is that for machine learning, it's not always easy to make sure that we're having the right level of information, especially when you're looking in fonts or things that are very, very small and that are very difficult to see the difference between one of the other one. So what we do is we feedback loops. We make sure that we understand what we have in front of us. We make our machine learn. Our people are going to help our machine to train the models and to learn and get it back into the loop. And that's how we put in place what we call an hybrid solution. On one side, we have the machine, but when the machine has a doubt, it goes into our own teams. Those humans are going to check what the machine couldn't check, and essentially will help the machine to be retrained and get better and better over time. Each time we're onboarding a new document, we're going to explain to the machine how it works, and then we're going to learn by checking document after document and helping between human and machine to improve and make sure that we have continuously improves and we are ready to do not let any type of fraud pass. But now it's time for the demo. A short video. Let me take you there. Here we are. I hope you hear.
Welcome to Onfido's SDK demo. A user can verify their identity in as little as 15 seconds. First, they select an ID type and an issuing country. Then they take a photo of the front of their ID, and then the back, so we can verify that the ID is genuine and hasn't been tampered with. Then we compare the ID photo with a selfie or video captured in-app. We calculate how similar the two faces are by analyzing a number of biometric data points. The user submits their verification, and the results are sent to you.
Thank you very much. So let's go for any questions if we have the time, if we still have the time. If not, I'm going to answer to the questions separately. So do I have the time for a couple of questions, or should we go to the next presenter?
Yeah, go ahead. There's a couple of minutes more. Take a couple questions if you have them.
Okay, so I don't know what verification process was, but what challenge did you face in this verification process? Well, definitely, as I explained, fraud is one of the challenges that we're facing. The other one is making sure that we are close to the reality. And as I said, that's why we got into this loop that allows the machine to learn and to make sure that it's better and better over time. So this is essentially, these are the two elements. One is making sure that we catch as much fraud as we can. The second one is learn the machine, and probably the third one is user experience. Obviously, all these needs to be done with a high level of user experience, because this is what people are waiting on, and this is what is going to improve onboarding processes over time. So let me see another one. Are some, I don't see everyone. What is this one? So how do you check that international and local ID is genuine? So we compare that to the standards. Each document has a standard or in the system. So you know, we know how any type of passport or document ID should look like, and we compare that to that, and we train the system to be to make sure that he's looking at the right type of document. So
Simon, if you've got one more question, go ahead and take that one, and then we can come back to some more toward the end.
One last one. Where potential clients are entities as opposed to natural person, can OnFIDO verify the authenticity of corporate documents? So we concentrate ourselves in ID documents that have been issued by governments and are standards. When in terms of B2B, what we do essentially is to check the ID of the owner of the company, but we don't do the documents that are the kind of paper documents that don't have any particular security features for a B2B. So essentially, we're concentrating ourselves in the ID of the owner of a company or of an individual. Thank you very much.
Great. Thank you very much for that, Emina. Now I want to move to our next demonstration. I'll invite up the next speaker. Is Cormac Sheedy. He is the head of sales for the MENA region for Finergo. Cormac, if you're ready.
Good afternoon, Ken. Just checking you can see my screen. Delighted to be here. First of all, thank you to the DFSA and to DIFC for the invitation this afternoon. My name is Cormac Sheedy. I'm the head of sales here at MENA for Finergo. We're based in DIFC. We're in Emirates Financial Tower, and we've been licensed by the DFSA just over a year ago. And I'd like to talk to you about Finergo this afternoon, give you a bit of background on the company, on our DNA, and also then give you a very quick demo on the Finergo system. So at Finergo, we spend a lot of our time talking to very senior individuals in financial institutions like many of yourselves. And the same things keep cropping up when we talk to them. And that is, as was referenced earlier, the importance that clients must be given a proper experience. They want to move away from previously where they operated handing in paperwork, spending time in the bank. They're too busy. They live busy lives. They're looking for a high-tech, high-touch relationship with their bank. You heard from Brian earlier talking about the regulatory increased compliance. And the banks tell us that while all this is going on, there is increased pressure on them to provide better KYC, to keep their regulations up to date, to make sure that all the AML checks and sanctions are correct, and making sure in some cases that the tax rules are also in place. And this is happening at a time when the time for them to onboard clients is taking longer. So when we talk to these institutions, they tell us that it's a number of things, in fact, that are keeping them awake at night. It's never just one thing. It's 4 or 5 of these things that we call a perfect storm. And I hope today, when we touch on some of these points, that it resonates with you, and you can see how the Finergo solution works towards helping people in situations like this. So when we look at our own business, we were founded in 2009 in Dublin, in Ireland. Many of you will recognize my Irish accent. The business started from a backdrop of after the financial crisis in Ireland, where a particular financial institution came to the gentlemen founders of the company and asked them for a solution to their issue. We developed that solution for them, and then we were approached by banks in the UK. And it took us through from 2010, where in 2013 we went and opened offices in the US and brought on clients on board in the US. And it takes our journey right then from more and more institutions approaching Finergo and us building out our business very steadily. And when you look at it over the past decade, in fact, we get to a point where in 2018-19, we brought on some local clients here, and some of these names will be very familiar to you, and they would be the likes of Fab in Abu Dhabi and Benefit in Bahrain. So in a 10-year period, what Finergo has managed to do is we've managed to build a global business. We've managed to create a solution that's not just for one bank, but in fact for any financial institution around the world. The solution that we have is relevant. And when we move on from there to really what is where we are today, we would describe ourselves as at the forefront of client lifecycle management. And for us, client lifecycle management is the part where the client moves away from just being a prospect of the bank right to the onboarding, to the doing all the checks and balances that are needed to onboard a client, doing the AML, doing the KYC, making sure that client isn't on any sanctions list or any watch list, or maybe in this part of the world is part of being a PEP, and that's important to the bank. And we come up very, very highly ranked. We come up in the ranked at the top of the scale when it comes to the solution for client lifecycle management. So I'm really painting a picture to you there of, in a decade, we've built a global business. We've got 11 offices worldwide. We've got over 700 employees. We're now looking after over 80 top financial institutions in the world, and all of our investment, what's so important to us, is ensuring that the client lifecycle management is not just for now, but also that we're building out a solution. And I'll talk to you about that in a second, in terms of us actually future-proofing the bank. Some of these names are household names to you. This is a sample of our client list. Some very big institutions across the world that have done a lot of due diligence on picking client lifecycle management providers. You see the likes of Credit Suisse, you see HSBC, you see Barclays, Bank of California, and some of the banks out in Asia as well. So at the moment, we're very fortunate that 27 of the top 50 financial institutions in the world are using the Finergo solution. But what's really important, I think, is the second number there. They tell us on feedback that we are reducing their onboarding time for clients by over 80%. And that's very significant, because when we step back to what I said earlier about the perfect storm and the whole issue they have about the time to onboard clients, by using automation, by using technology, you can see how it really does help these institutions and saves them time and effectively saves them money. And anytime any staff member dips into the Finergo system and does anything for a client, that's fully recorded. It's fully auditable. So from the point of view of saving audit costs, that's there as well. But you can see exactly where you are with any of the clients that you have. You can see a full 360 degree on any, whether it's a retail or a corporate client, without any difficulties. So they tell us the return on investment is over 30% as well. And sometimes we get asked, where do we sit? What do we mean by digital transformation? And I guess there's two aspects to it. There's, first of all, there's the protecting the bank side of it. So it's ensuring that the policies and that there's consistency. It's making sure that on the AML and the KYC side of things, we're at the forefront. Of the 700 people we employ, over 40 of these are working purely on the regulation side of things. And all these people have come from industry. So we've built a whole business around making sure that we're at the forefront of the regs. And what we say in terms of protecting a bank and a financial institution is, it's not just for today. What the Finergo solution does is it future-proofs the bank. It makes sure that from their point of view that they are protecting against future legislation. But of course, from the customer side of things, back to what we touched on earlier, it's about giving them an enhanced experience. It's about automating their onboarding. It's about them having the ability to buy different products from the bank and doing it as seamlessly as possible. And that really resonates, because if you have a client in the bank, they may be dealing with the corporate banking side, they may be dealing with retail, they may have relationships with the bank on the investor and treasury service side of things. And they come back and they say, well, we need different documentation. We're dealing with a different part of the bank. I'm seen as a corporate client here. I'm seen as a retail client. With Finergo, you become a unique client within the financial institution, and that enables you to keep yourself fully refreshed, fully automated, but it also enables the bank to remain fully compliant. So within those 7 or 8 minutes, I've given you an overview. What I'm going to do now is I'm going to ask the DFSA to play you a 3-minute video on why Finergo. So we're just waiting on the video. Thank you, DFSA.
Finergo is the #1 provider of client lifecycle management technology solutions. Our rules-driven technology helps financial institutions to onboard clients quickly and efficiently and manage compliance throughout the client lifecycle. Customer experience has become the main battleground for financial institutions, with customers demanding a truly digital banking service that delivers 24/7 convenience and real-time responses. However, most banks remain poorly joined up, with different policies, processes and systems for each product line, customer group and country, making it difficult to deliver a timely and seamless customer experience with a robust and cost-efficient approach to risk. Client Lifecycle Management can help. Finergo's Client Lifecycle Management technology manages all of the complex requests in the end-to-end journey of the customer lifecycle on a single platform, from initial onboarding to ongoing management of clients and accounts, all the way to client offboarding. Finergo CLM places your customer at the heart of the client lifecycle process and empowers your relationship managers to take more control over the onboarding process, giving them a complete picture of the customer and allowing them to track, update, and create requests. There are 3 parts to Finergo CLM. Client Lifecycle Management Orchestration. Broader and deeper than a BPM or workflow solution, Finergo's orchestration module comes out of the box and allows you to capture complex, cross-border requirements in a single case. The solution connects all internal stakeholders to the onboarding process, KYC and compliance, credit, legal and operations, providing them with a single client view that enables them to onboard clients quickly, efficiently and compliantly. Finergo's regulatory rules engine is the regulatory backbone of your business. With an inbuilt understanding of customer, country and product regulation in a single tool, it consumes key information about the case and customer that is used to assess the level of risk and determine the documents and data needed to satisfy those regulatory rules. All of this information is gathered into a single client or legal entity profile, which can be reused for all events throughout the customer lifecycle. Data management lies at the core of transforming the client lifecycle. Finergo CLM centralizes all client information from internal systems. Through advanced APIs, Finergo CLM seamlessly connects your front and middle office teams to the latest information they need from a wide range of data services in the marketplace. Together, these capabilities enable Finergo to efficiently reuse data already gathered and automates processes by sending data directly into downstream systems. Finergo CLM provides financial institutions with the capability to deliver on customer expectations and effectively manage risk in the digital age in a single application. And not just for today. Finergo's active global client community of financial institutions have direct input into our regulatory and product roadmaps, helping us to keep up to date with the latest regulations, technologies, and best practices. We look forward to showing you much more about Finergo and what we can do together. For more information, visit www.finergo.com.
Ken, that's it from Finergo. Thank you very much for the opportunity today. I think I may have had a Freudian slip earlier when I mentioned our license. We are, of course, DIFC non-regulatory licensed and very proud of it. So thank you for the opportunity, Ken, for today.
Cormac, if there were there any questions that I think we have another minute or two, if there's anything that we can respond to.
Yeah, we have one question in that asks about how we've been responding or what we've seen in terms of our client interaction since the crisis started. And I guess like many other of the people watching and listening today, we've had quite an increase in activity in the past couple of months. I guess some of the financial institutions that we talk to are looking hard at their own automation and their own systems, and they're kind of realizing that though they've been thinking about this for some time, it's now time to move forward. And it's one thing that we've certainly seen. The inquiries have increased, and I guess time will tell how many of these want to move forward. But because this all happened so quickly, it did catch a lot of institutions on the hop. And I think they feel now is the time to, as we move out of it, is to automate and get plans in place as quickly as possible. Heaven forbid something like this were to ever happen again.
Okay. All right. Very good. Thank you for that, Cormac. Appreciate the time.
Thank you very much indeed, Ken.
All right. Let me introduce the next demonstration. The next company, Jahanseb Awan. He's the founder and CEO of Azakao. He's also the CEO of J. Awan and Partners, Azakau's parent company. So I'll now hand over to Jahanseb to show you his solution. Jahanseb, they're all yours.
Thank you, Ken. Can everybody see my screen? So are you able to see my screen? Ken, can you confirm you can see my screen?
Yes, we can see your screen.
Okay, fantastic. Thank you very much, Ken. I really appreciate that. We at Azakao are very happy and delighted to be participating in this webinar. I'm going to take a couple of minutes to basically go through what our value proposition is, where we fit in, and it's very, very good to see Onfido and Finergo leading the way here. We are a 2-year-old company based out of the UAE. We currently are in Toronto and in Karachi, and hopefully expanding further. What we saw in the market is a significant gap for small and medium-sized enterprises, financial institutions that are looking for a solution that not only caters to digital onboarding, but a complete compliance review and approval process that is important for, let's say, any DFSA regulated company. And in that research, we decided that we are going to fulfill that gap and provide our customers with a single solution where they can have all of the aspects that they need to comply with DFSA regulations, other regulators, regulation like the FCA, the Canadian regulator, MAS, the CMA, and so on and so forth. So in doing that, what we have found is that, and this may be not as impressive as some of the others, but we found that we've been able to reduce costs for our customers around 25%. This obviously doesn't apply if you only have one person. It's difficult to ask 3/4 of a person to come to office. But if you have a reasonable compliance team, it does work really, really well. Where you have such instances, we have seen a factor of 4 in terms of efficiency increase, and reporting accuracy increase has been well above 50%. The reason why we've been able to accomplish this is obviously the ability to digitize information, not only coming through customers, but also digitize information from within the institution. We sort of sit in the middleware phase, where we digest a lot of information from different systems from the financial institution, digest information from the customer front end, and also send information to different systems within the financial institution. So this has been quite an interesting journey for us. What we offer currently is digital onboarding. We cover both legal entities and individual customers. I did hear a question before about verification of documentation for legal entities. I'll come to that separately. We provide FATCA CRS, data capture, and reporting. Our customer management core tool basically is where most of the magic happens. This is where you manage all your customers. This is where the compliance team signs off on all the customers. This is where you communicate with your customers. We have a complaints management tool, which is beyond the scope of our conversation today. we have a reporting engine, and we decidedly built that separately to sit on top of any of the modules that we have here to allow our customers the freedom to either have any of our modules or a combination of our modules or just the reporting engine platform in itself to extract information for both internal reporting and external reporting. And they found us to be quite a success. And last but not least, our AML monitoring enhancement tool. This came out of a client request who was suffering significantly from a case of false positives. And we have managed to reduce a significant number of that, but well over 70%. How we are different, I think it's important for us to consider where the value add is. As my esteemed colleagues have also mentioned, the way we onboard customers digitally, we provide any financial institutions. We have customers across asset management, fund management, crypto exchanges, conventional banks, etc. So in their journey for digitization, we provide them the front end, and I'll show this to you in a little bit, that they are able to onboard customers digitally. How do we do that? We do a liveness test, and we do facial recognition. Facial recognition is done not only during the liveness test, but also for the IDs that are being submitted. So we want to make sure that the ID belongs to the person, similar to what Onfido has said. And the ID verification process works very, very similar. We are also connected to various government ID institutions, like, for example, Emirates ID, via our clients to verify IDs. So that also helps. If you are a Saudi institution or an Emirati institution, you can connect to Emirates ID via your permissions. And then the ID verification process even becomes simpler for international customers, Western European clients. There's a lot of information available through public sources, and the ID verification process works there as well. What we do additionally is source of wealth and funds information capture and verification, where publicly available information is available. For legal entities, we identify directors and beneficial owners. Our beneficial owner algorithm allows customers to basically, in a very simple, user-friendly way, go down to the beneficial owner percentage that your institution requires. So in some places, there's a 5% beneficial ownership requirement, and the UAE is 25%. So they can fit or set the limit that they like on that. We also do suitability analysis, as I mentioned previously. That's a significant piece for any small to medium-sized institution that is selling financial products, to conduct suitability analysis and assess risk on a product basis. We do classification as well. This will be very close to the DFSA's heart, and ADGM or the UKFCO or MAS. Our system also allows for manual override by the compliance team. The system is completely user and permission driven, so you can decide who gets access to what. And one thing that we have done well, more than most, is that our system provides a complete audit trail. So from the time your customer logs into their profile, which is provided by us, to the time you approve your customer, and every action taken, and even after that, for the duration of the relationship with your customer, every action on our platform or on the onboarding platform that the customer uses has an audit trail, has a timestamp. So when the regulator comes to you and they want a particular report or a particular view on a particular client or on a list of clients, you can pull that very, very easily. Our clients basically are finding this particular feature of immense value, especially the ones with a significant number of clients or regulator heavy licenses. And this has served us very, very well. Our regulatory reporting engine, as I mentioned, provides the internal reporting tool, so you can create any report that you like as long as the data is digitally available. We have a standard set of reports as well. And then we connect with your regulator if they allow you to have a regular reporting submitted to them directly, or you can produce PDFs for any of the formats, CSVs or Excel that you like. Just to give you an idea about the customer dashboard, so if you have our solution, your customer will see something like this on a screen, and basically that will allow them, if you look on the left side, that's a menu that can be completely customized, and when the customer comes through, they see all the information they have provided. They will always see everything. So from a data protection and GDPR point of view as well, we make it very, very easy for your clients and for yourself to see what is happening, what information has been provided, when it was provided, what documents have been uploaded, etc., etc., which I will show to you once I show you our the customer core end solution. Again, as I mentioned on the individual onboarding, and this also applies to the beneficial owners as well as the directors of a company, there's a digital onboarding process there, which is based on liveness, facial recognition, and ID verification. So we go through the entire process, and if everything checks out, you can have a sign off within 15 to 20 seconds on an individual customer. Legal entity customers can take anywhere between an hour to about a day to get sign off, depending on how much verification is required from the documentations. The real value add for our system is our client dashboard, our customer dashboard. You have the KYC dashboard here, which is again completely customizable. There are different analytics available here. We provide input in relation to customer classifications, sanction screening, exceptions that you have signed off on, how your entire customer profile changes from a risk point of view, high, medium, low, geography standpoint, suitability standpoint. Another feature of our solution is the onboarding speed, which is quite a beneficial feature. You can see on our platform in the analytics section, how long does it take for you to onboard a customer, and where are the roadblocks. So if you have customers in a certain division that are taking longer than some other divisions, for example, you can identify the causes for those delays and improve your processes. So we find this also very, very useful. For our customers who basically take on several products that we have, there's a connectivity element between all our products. So our KYC solution is connected to our complaint solution, which is connected to our Factor CRS, to our transaction surveillance solution as well. And that allows you to digest all of the information that you may not be collecting together and analyze that data in a way that will provide a much wider and probably more important analysis. So, and the other thing that we also do is that if you have different solutions from us, you can completely customize your dashboard. Even if you have a KYC dashboard alone, you can customize the solution and have it permission-based. So your head of compliance will only see what he's interested in. Your branch manager will only see what he's interested in. If you're a fintech, your compliance officer, your head of risk, your COO and your CEO will see whatever they want to see in the dashboard, which also gives quite a lot of flexibility to our clients in determining what information that they want to see. Our multilingual capability will be going live in Q3, and we are launching our solution in Saudi Arabia with the Arabic capability. So please look out for that. And some of the things that are very important for us to consider from a technical standpoint, we are cloud agnostic and we are deployment agnostic. So we can pretty much deploy in any cloud, and be it Azure or AWS or any local cloud at Slot or STC in Saudi, for example. Some of our fintech clients, they always want to be on the cloud. Our more conventional clients want to host the solutions within the data centers. So we're agnostic to that. As I said, we cover conventional fintech and crypto. And for crypto currencies, we do provide blockchain review, a wallet review, and a currency review capability. And for the fintechs, there are a few other options that we have in terms of location. And digitally sort of viable solution to become more robust in their onboarding solution and other compliance deliverables. Ken, do I have more time?
Yes, you do. If you want to just repeat the last 30 seconds of what you said, I think quite a few of us, there was a glitch in the audio. Some people may have heard you, some may have not. And if you've got two questions you want to address, go ahead and do that.
Sure. Sure. So basically what I was saying previously was that we are, the features of our platform are quite robust. We are cloud agnostic and we are deployment agnostic. So we can deploy on premise and we can deploy on the cloud. We are finding that our conventional clients prefer on-premise deployment and our fintech clients prefer a cloud deployment. Again, we are country and regulator specific as well. So if you buy a solution and you're a DFSA regulated entity, our solution comes ready with compliance with the DFSA regulations. If you are a Saudi regulated institution or a UK regulated institution, our solution comes with compliance controls that are specific to those jurisdictions. If you're across several jurisdictions, again, we provide a solution that is coherent and relevant in each location. So if you have a branch in the UK, head office in Saudi, for example, the regulations will and the rules engine will work accordingly to give you the results in each location according to the local requirements. And we have automatic regulatory updates. Again, just to mention, we have a team of 20 compliance professionals supporting our business and supporting basically the rules engine, our interpretation of the rules, updates, etc. A lot of data analytics that I've also mentioned that are available. So hopefully that gives you an idea. If I can, I would like to show you hopefully the back ends. Are you able to see my screen?
Okay, can you do this in about another 60 seconds? Does that give you enough?
Sure. Okay. That's fine.
Sure.
That's fine. So this is basically our customer rules engine. On the left side, you see the different modules and products that we have. It's a very simple, user-friendly layout. You can access all of your clients through the single platform. You do obviously sanction squeezing, negative news media, PEP screening at the time of onboarding. So you will see all the sanction screening results here. You can scroll down here. You will see all the PEPs. All of this is done automatically. You will see exceptions here that if the compliance team has approved clients with certain exceptions, they'll all show up in the dashboard here. Also, all the documents. So one of the things that we do really well is the documents that you receive digitally. And when are they expiring? You can set up your notification requirement internally and to your customers through the platform. Your customers receive it directly, and then they can go through the refresh of their customer documents through that process. From the platform, you can simply go in. I'm actually showing you a live demo here. You have all of your customers here. You can do filters through sanction screening, through the risk profile. You can go into any customer where you have all of the details available. You have an AML risk assessment that is done, that is compliance with your local regulatory requirements. You have a sanction screening tool here that you can use and sign off on all your sanctions and PEP screening hits. And you can do that.
Johnson,
So,
thanks. That just about wrap up. You're just about the end of that.
thank you very much. I really appreciate the time.
Okay. Thanks for that, Johansson. And Johansson still has, he'll be online in the background, so if you submitted questions to him that he wasn't able to get to, he can still respond to those in the background for you. Okay. Thanks, Johansson.
Thank you, Ken.
So the next solution that we'll bring up is Norblock. And Astyanax Kanakakis is the CEO and the co-founder of Norblock. Before we get started with Astyanax, just want to go back to the two polls that we asked earlier, because I think the responses were quite interesting that we received those. So the first question that we asked was, does your business, or how important is digital onboarding for your business? And 86% of the respondents said it's essential or important. But then when we asked the next question, does your business use digital onboarding, 55% said they actually use it. So it's pretty clear there's still some work to be done. And we'll have another poll after Astyanax is finished and try and unpack a little bit about exactly what's left to be done in that. So Astyanax, I'll hand over to you.
Perfect. Thank you very much. I'm Astyanax. I am the CEO and co-founder of Norblock. And I'm here to talk a bit about what we do in Norblock, where we're focusing on, and how is this relevant to regulatory technology, and how is this relevant also to the region, to the MENA region. So in a nutshell, what we do in Norblock, we're focusing on piping. Piping may not sound that exciting, but I have to go more into the details. What we do is that we focus on being the backbone of regulated data networks. What this means, I'll explain a bit later on, but essentially when we talk about regulated data, we talk about anything from patient records to identity to KYC data. We're the first company in the world to create the KYC ecosystem, essentially distributed KYC utility, which is in production right now in the UAE, live from the beginning of the year with DIFC and Masrek being the first two participants, and aiming to have more than 200,000 company files on the platform by end of year. And actually our platform goes hand in hand with the operations of banks. Moody's singled it out as a platform that actually is credit positive for the banking sector, because better compliance also means better business. Now, what is the problem that we're focusing on? We're focusing on breaking the silos around KYC data. Silos around collecting KYC data, silos around validating KYC data. Right now, if let's say I have a company come to the UAE, I need to register this company with one of the free zones, let's say the DIFC, and then also provide information again to a bank, so the banking account, same information to auditors, accountants, all obliged entities. And that creates enormous duplication of efforts and also enormous potential for different versions of truth to exist between these different organizations. So what do we do in order to alleviate these problems? What we do is that we've created three platforms, and I'm going to start from the right-hand side, which is where the company actually started, and then move to the left-hand side. So FIDES is a platform that allows for the regulated sharing of information between one institution to another at the request and control of the owner of that information. That information, for what we're talking about right now, is actually KYC. So information flows from one bank to the other at the request and control of the owner of that data. And I'll go into greater detail later on. Atlas is our platform that essentially allows the same function, but within very large institutions, such as, let's say, Citi or HSBC, connecting different geographies, different jurisdictions, different departments, instilling single version of truth for every piece of customer data. And finally, Sancus is our digital onboarding and KYC platform, which enables essentially the collection of data and the validation of data from the customer. Starting from Sancus, a bit more about Sancus. The way we approach the digital onboarding platform question is essentially trying to create the most modular and most customizable workflow available for our clients that allows them to basically use best-in-class data service and data providers, KYC service and KYC data providers out there, to plug them on that workflow. So for example, on FIDO is one company that we use for ID verification. We have different companies for PEP sanction list checks, and all these come together in one fully customizable workflow platform. Now, this platform collects data and validates data from the customer. There's no sharing right now between different institutions. But let's see what happens when we go into sharing data. Now, Atlas, what it allows in a nutshell, it allows, let's say, a customer of HSBC in Dubai. He goes or she goes to HSBC in Dubai, provides the information. Once HSBC officers validate that information, the information is placed on a distributed ledger-based ecosystem, let's say, that operates within HSBC. If the same customer goes to London or any other geography or department, they can actually use the validated information from the entity in Dubai, from HSBC Dubai, to push it back to the entity they want to onboard within HSBC. The recipient of the file within HSBC, let's say in London, they can see the data that was validated previously by their colleagues in Dubai. They don't need to do the work again. At the same time, if anything changes on the data, that change is propagated to all parties that have access to the data. A thing that was mentioned before is around customer service. So how important is customer service? Customer service is also important when it comes to compliance. The harder you make it for a customer to provide their information, the easier it's going to be for them to forget to provide it or to not be very forthcoming when something changes. What we do here is that we allow the customer to change information, to update information once, no matter how many counterparties have access to that information, no matter how many departments of HSBC or geographies of HSBC. And additionally, the platform allows for a fully immutable audit log of actions, so we can see who did what when, and that is only accessible by the compliance department of the bank and potentially by regulators in the jurisdiction. If we take it a step further, we're talking about sharing of data at the request of the owner of the data between institutions. Essentially, going into an institution as a client, let's say I go to Bank of America, I onboard Bank of America, I provide my information, Bank of America validates the information, it's placed on that ecosystem that I mentioned before, now it's FIDES. If I go to another bank, I don't need to reveal any prior relationship. I just ask to be onboarded. The moment the request for information, let's say from UBS, comes, all the data is pre-populated in front of me as a customer with what I've given to Bank of America. I just need to sign digitally and push back to UBS. UBS can see now the stamp of validation of Bank of America. They don't need to do the work from scratch. But at the same time, Bank of America can elect to receive a fee every single time someone sees data that has been validated by that institution. That means we have a fully equitable ecosystem where we have all these institutions working in concert to validate information. We have a customer that provides information once, whether it is for updates or for onboarding. We have a single version of truth across these institutions, something that's particularly important, especially nowadays when we see that if we look at corporate customers, they have 3-4 banking relationships at least, each one of them. Now, this sounds very good in theory. What about practice? This is the notion of the distributed KYC utility. The notion of KYC utility has been around for quite some time. It has been tried many times in a centralized fashion and failed many times due to that architecture that was actually chosen. Now, with the advent of distributed ledger technology, the notion of a distributed KYC utility became a reality. So what I just described is actually now in production, and it's in production in UAE, starting with DIFC and Masrek being the first 2 institutions, and having at least 8 institutions by the end of the year live. The way it works, it's basically very simple, that you have a customer that can use data, validate data from one organization with another organization. One version of truth across an equitable ecosystem. Closing, I would like also to mention how the recent developments actually affect what we do at Norbrook, how they make it more or less relevant. Now, if we look at what happened with the pandemic, at Norbrook we see 3 key areas. First of all is the low-touch economy. It has been touched upon by previous speakers, essentially moving to a digitized interaction, remote interaction the customers. The fact that actually we're having this conference remotely is a manifestation of this new reality. But there are other two elements that are equally important. First of all is data aggregation, collection, and synthesis. The silos of data are slowly being broken down, clearly because there is a very important need to synthesize data to provide more accurate analysis and much better version of what the truth really is. The moment though you start doing that, the moment you start sharing data, what goes hand in hand for that to take place is a full appreciation of the privacy and data and ownership control elements of such a function. What we do at Norblock, one of them, actually my personally favorite element, is what we call the customer portal, where the customer can see his data or her data across institutions, who has access to it, who validated it, and at the same time revoke or limit access to their data. We have to understand that if we're actually moving into a much more digitized reality, that reality has to come also with additional, let's say, duties and responsibilities when it comes to safeguarding, not only safekeeping of data, but also auditability of how that data is used and how this data is shared. I would like to close here, and I'm very happy to take any questions that you may have. So I have a question here, actually quite a few. I'll start with the first one. For this distributed ledger KYC to be practical would require government or regulatory mandate. What would be the motivation for banks to engage without this mandate? Clearly, there needs to be a mandate. So actually, this is something that we discussed. What we do in UAE has been presented to the central bank of UAE, has been presented also to DFSA in installation with DIFC and Masrek Bank, and they're fully aware of what we offer. Clearly, this is something that very much goes hand in hand with the effort to create a much more equitable and auditable KYC ecosystem in the country. So the feedback we receive is actually very positive. So I don't actually say that what we do is doing this directly with banks without having in the loop the regulators or the central banks. This is certainly not how one should proceed. So we actually involve them from day one in our efforts in UAE and actually in other locations where we operate. Second question, is the data validated by different financial institutions? Is acceptable by the regulators in different jurisdictions? So that's a very good question. Let's say that I have, let's say my address validated by ENBD in UAE. Will this be accepted by the regulator in HSBC in London? The regulator does not care who did the validation of the data for you, cares what you have in your data repository and what you say that you validated. So for example, if ENBD validated my data, my address in UAE, and HSBC is using it in London, HSBC in London is responsible for the correctness of the data. So essentially, ENBD in that relationship takes the form of a KYC service provider to HSBC. There are clearly contractual elements about how we go around validating data between ENBD and HSBC, but the regulator, because you cannot roll over responsibility in most jurisdictions that we've worked in, the regulator, when they perform audits in someone, they actually place the responsibility purely on the person that they perform the audit on. You cannot roll over responsibility. So the banks there, when they cooperate between them, it's the similar as basically having a KYC service company. That's the role that they play between them. Another question, how resistant are clients to using new onboarding KYC systems? I would say that they're not resistant at all. It's the complete opposite. In the first month that we've been live with DIFC and Masrek, the uptake of the platform has been much more encouraging and much more, let's say, positive than we expected it to be. The reason being is that onboarding a bank, creating a relationship between different organizations is a very, very painful process. It takes a lot of time. So actually, if I may say so, the starting point is so low that it doesn't take much for customers to move to a new reality, a reality where you can actually seamlessly move data from one organization to the other and have control of that process. Another question. If one bank spends millions to digitize the data and compile deep data, why would they share that for free with other institutions who have not invested in similar technology? Very good question. You don't share it for free. That's the point I mentioned around the possibility to receive a fee if you share your validating stamp with others. So what banks share is the validation of the correctness and completeness of the customer data. They do not share any KYC risk rating results because it's purely based on whatever each bank is doing, the rule-based methodology, etc. So if, let's say, a bank has invested millions in digitizing the review of customer data in completeness and correctness, then what they can do, what they can offer to the other banks in the ecosystem, they can say that if you want to see whether I validated that data, then you have to pay that fee because I've invested a lot and you know I've invested a lot and I'm doing the best job out there in doing that. If other banks decide to do that, then they will have access to the validating stamp of that bank once the customer pushes data to them. If they don't accept this, then the customer will still be able to push the data that he used with the amazing first institution that they validated very well, but the recipient institution will not be able to see the stamp. So, because there's no agreement between the two institutions. So, of course, it's equitable, and if you've invested in validating data, then you should be able to actually monetize on these efforts and that investment. With FIDES, is there a risk that the first bank to validate could face liability if it had validated fake documents that lead to AML failings? No, it's basically the same liability that PwC would face if they work for, let's say, ENBD, and PwC validated something wrongly. It's basically the exact same liability that they face. Additionally, and I have to basically here say something which is very important. The best right now, because we operate in silos, each bank reviews information themselves. So I take information, I review it. Let's say if someone fails and they don't do a great job, the way it works now, that bank will never find out. That customer will go to another bank, the other bank may find a mistake, the first bank will never find out. With the ecosystem that we have in place now, the fact that there is one version of truth which is shared between banks, it does allow for banks to work in concert and to possibly pick mistakes that someone has done in the process. And once that mistake is picked, that bank that actually found the mistake corrects it, and the correct information is propagated then to the rest of the banks. So clearly, it's a much more compliant ecosystem that we're working on. I'll answer the last question, which I don't know how much time I have, but there's one around GDPR. The platform that I just described is basically us taking GDPR and manifesting it in one technological platform. Why? Because the customer has full control of their data, can revoke access to the data, can control who can see it. And this is something that basically is at the core of what GDPR stands for. So GDPR is actually one of the first invoices we paid as Norblock when we created the company back in 2016 was to a legal practice in Stockholm, where we're founded, to review the platform according to GDPR rules and the AML directives in the EU. And actually that helps us a lot because the way we store data and we share data is very much around GDPR guidelines, but also we enable GDPR compliance by allowing the customer to have full control of their data at any point of time. Ken, do I have any more time, or are we?
If you want to answer one more question. Yep, there's another. Well, there's another 2 minutes left. So how many you think you can answer in that time? Go ahead.
So the data validation. That's not the question. So if you charge a fee validation, doesn't that open them to liabilities that turns out to have problems later? Again, it's the same thing. You see yourself, banks see themselves as KYC service providers. That's the role that they play in this ecosystem. And this is the liability that we're going to have is basically according to the contractual agreement between the different banks in the ecosystem. So Ken, I think that is all for now. These are the questions I could answer for now. But please, feel free. You can email me at any point of time or the company, and I'll be more than happy to get in touch with you.
Okay, great. Astyanics, thank you very much for that. and you'll hear more from SDNX in a few moments. So the next session that we have coming up, I'll explain that to you in just a moment. Before we get to that, we're going to put up another poll question. See if we can get that up. So following on from our polls earlier, how important is digital onboarding to you, and are you using digital onboarding? Now, what is the biggest challenge to you in digital onboarding? So we'll leave that up for a little bit. While we're doing that, I'll explain the next session. So the next session is going to give you a perspective from what is the DIFC doing in the area of eKYC. You heard a little bit about that from SDNX and his Norblock presentation. We'll give you some perspective on the regulator's view. So we'll hear from the DFSA talking about our view on digital onboarding, and then we have a guest from one of the local banks. So we'll give you a private side perspective on that as well. Okay. So on this panel, I'll invite them on, and each of them can just give a word or two about themselves. But first on, I'll invite Salman Jaffrey. He's the Chief Business Development Officer at the DIFC. We have Lawrence Paramasivam. He is the Director in Policy, Risk, and Strategy at the DFSA. Michael Wong, he's the Group Head of AML Compliance at Emirates NBD. And SDNX Kanakakis is going to come back. You just heard from him as the CEO and co-founder of Norblock. And I'll be on this well to help moderate the discussion. So the way we're going to do this is we'll let each of them, we'll just go across everybody for a moment. SDNX, if you don't mind, I think everybody knows from your presentation. Probably don't need to give your bio again. Salman, if you want to start, just 60 seconds on who you are, then I'll go to Lawrence and then Michael, and then we will have a couple questions, and this is mostly going to be an audience participation. Once we go do one round, we'll open it up for your questions. So Salman, you want to start? Is your mic on, Salman?
Okay, let's try that again. All good?
All good.
So my name is Salman Jaffrey, and I am responsible for business development at the DIFC, which means I have the distinct pleasure of interacting with the entire body of clients and prospects who are in the process of shaping the markets that we're serving. I also have the pleasure of working closely with our regulator, the DFSA, collectively towards the project of sector development for innovation here. So delighted to be here. Great conversation so far. Over to you, Lawrence.
Great, thanks, Salman. My name is Lawrence Paramasivam. I'm a director within the Policy, Risk and Strategy team in the DFSA. Been with the DFSA for a little over 13 years now, and I've had a number of areas of focus through that time, but in particular around financial crime, and been quite heavily involved with a lot of the work the UAE is doing in terms of its FATF mutual evaluation, preparations, and follow-up work. Over to you, Michael.
Good afternoon, everybody. My name is Michael Wong. I'm the Group Head of AML Compliance within Emirates NBD. I've had that position coming up to about 3 years. Formerly, I was with the DFSA, and so just thank you very much for the kind invitation and the opportunity to participate in this panel.
Okay, thanks. SDNX, want to just do one more? Remind everybody who you are, in case they forgot in the last 30 seconds.
Of course. I mean, I introduced myself 15 minutes ago. So I'm SDNX. I'm the CEO and co-founder of Norblock, a company that focuses on regulatory technology. And it's great to be here and actually be part of this fund.
Okay, great. Thanks, everybody. So why don't we start, Salman? Maybe you could just give us some perspective on what is the DIFC doing? What steps DIFC taking to support eKYC in that development?
Sure. So look, Ken, thanks for the handoff. If this were a baseball game, this would be the proverbial 7th inning stretch. I think we're going to tee up this conversation in the wake of some really amazing remarks from Brian, some great insights in the market, Hussein, of course, great demos from Unfido, Finerco, Azaka, Norblock. And now we'll try and provide some context from the DIFC. Look, a couple of thoughts. The topic is eKYC and digitization. And to me, what that really means from the perspective of market development is how do we enable scaled digitization, right? That to me is the real question. Earlier, Brian and Hussein talked about things like reduced onboarding time, increased customer experience. I think those are things that are really important. But to get to what we're doing requires a little bit of context. I'll spend maybe 2 minutes and provide up the story of how it is that we got to where we are today and why we're having this conversation. I mean, the first thing is to put the historical context of the DIFC, both DIFCA and DFSA, into context. When we were established 16 years ago, the mere establishment of this highly innovative financial system with a separate regulator and authority was a real source of innovation globally, as it allowed the UAE and Dubai to pursue financial diversification away from hydrocarbons. And that experiment has really yielded success. We have 2,500 companies, 25,000 people, 600 regulated entities, and a really robust financial system. But the key thing is innovation enables scale. So we were able to scale in terms of talent, capital, and firms. And that's a really important message we carry to kind of today. Where we're at today is at a very interesting point. Even before COVID, we're at a really pivotal time. The last 3.5 years or so, DIFCA, the authority, and the DFSA has really partnered very closely to pivot the business model away from not just traditional financial services, but into financial technology. Now, that was a no-brainer. We engaged with our markets consistently with the DFSA, and we knew that things were changing. Clients' needs were changing, customer experience requirements were changing, data was changing, cost of analytics and AI was changing. And essentially what we were able to do in 3 short years is create the region's deepest and most innovative financial ecosystem. I mean, the DFSA was the first in the region to launch crowdfunding regs. It was really unprecedented, really, really innovative. Why? Because we listened to clients. We launched the region's first fintech accelerator called Fintech Hive, right? Award-winning, very successful, driving expertise, driving knowledge, driving scale. Partnerships with Startup Bootcamp, also award-winning. Putting capital at risk, $100 million fund, which we aim to scale to 300. And of course, the innovation testing license, right? All things that have helped us today reach a stage where our fintech ecosystem has some scale. We're at 160, we'll be north of 200 this year, okay? But in setting up the conversation for what's next, COVID's accelerated this entire exercise, right? And it's not just about fintech. The expression I've heard our panelists talk about today is digitization. And that's exactly what we're trying to do. It is not just about fintech, although that's an anchor capability. It's about enabling scaled digitization, right? Which is designed to help Dubai, the UAE, and the region digitize. Why? Because our fundamental purpose, we exist to drive economic growth and job creation. And so that sets up the context for why we were able to partner with firms like Norblock, which, by the way, I don't know if Asianax mentioned this, was in the first cohort of our accelerator, and a firm that we have worked closely with. So let me pause there. I think there's some other things I want to discuss with Norblock, but let me pause there and pass it over to you, Ken.
Okay, why don't we just move across the panel then for a moment and come back. Lawrence, do you want to offer some perspectives from the DFSA on digital onboarding for a moment?
Well, thanks, Ken. I really want to initially first echo Brian's comments in the opening remarks, and there are a couple of statements that really hit home to me very much. That as a regulator, we fully support technology. We embrace RegTech, FinTech as part of the future of finance. And thirdly, we have an objective approach to technology, and you'll see in the slides there a statement of around the joint guidance, which was recently issued by the various UAE authorities, and I think this is a very positive step as part of the approach, not just for the DFSA, but across the governments and other authorities here in the UAE. As many of you are aware, the UAE as a country has a federal piece of AML legislation, and it applies across the entire country to financial institutions and DNFBPs, including in financial free zones such as the Dubai International Financial Centre. We've seen these laws be significantly enhanced the last couple of years to meet the international standards set by the Financial Action Task Force. So just on that, it was really pleasing to see FATF issue a really helpful guidance paper around the challenges of COVID, and very much FATF's message is it wants governments, it wants supervisory authorities to very much encourage more use of RegTech, FinTech, and technology as part of businesses. There are a couple of policy areas where in particular FATF thought were important to mention. First, more communication with the private sector by governments and authorities, and more public-private sector dialogue. And again, this is something at the DFSA that we put a lot of time and emphasis with our colleagues at the DIFC to make sure that we have dialogue with our stakeholders, and we hope events like today provide more of an opportunity for us to hear the challenges and areas. I guess the poll said there was 55% use of digital onboarding. So, you know, what will it take to increase that? These mechanisms help for firms to achieve compliance. In terms of the actual joint AML statement, it was issued on the 5th of May, and in particular, I'd like to thank our colleagues from the Central Bank of the UAE. They were very central in leading and coordinating this particular piece of work with all the authorities, and we were grateful to participate in it. And we actually believe that this hopefully will be the first of other sorts of joint guidance that we can issue collectively that will help provide more guidance and obviously assist our financial institutions and DNFBPs in meeting their obligations. And that was a message that Brian also echoed, that ultimately as a regulator, all we're focused on is really outcomes. We just want to ensure that our institutions are complying, and we understand that there's more than one way or one road that you can adopt to do that. And clearly FATF is also in line with that. More adoption of alternatives and non-traditional means to meet obligations is very much being endorsed. So I'll leave it at that, and then over to you, Ken.
Okay, excellent, Lindsay. And I think it's very helpful to reiterate the point you made, which is very good about the engagement between regulators and the industry. Brian mentioned where we're not against innovation. We very much support it. We just have to do it in the right way, and the only way we really understand what that right way is and how it can work is through the engagement, which is helpful then to have Michael on the panel with us today to give a few minutes of his thoughts from the private side, his perspective on digital onboarding.
Sure, thanks, Ken. Thank you. I mean, I think that the issue of kind of digital onboarding, you know, if we were to turn a microscope on it, I mean, it could take a week in terms of having a conference. You know, it is a challenge, but it also is an opportunity for us as financial institutions. You know, looking at ways in which, you know, I think that traditional drivers have been, as many of the speakers have mentioned before, kind of user experience, you know, from a financial institution perspective, capturing market share, but, you know, and also, you know, increasing the quality of the CDD. But obviously these times and this COVID-19 situation has kind of really spurred that on. I mean, right now, I think it was, you know, a luxury and something that you wanted to, as a financial institution, kind of embark upon, because it's such a huge journey. But now with, you know, branches being closed, customers being unable to be contacted, it has taken on a new kind of urgency and relevance. And, you know, for us as Emirates NBD, I mean, we have started this kind of digitalization journey, and not because of COVID, but you know, because of those other traditional drivers. But there are a lot of challenges to it. And if you look at kind of customer onboarding, it is just kind of one of many kind of cycles. You know, whether it starts with the kind of the risk assessment of a customer that will then drive and determine how you have to do your CDD. Then you want to be reassessing, you know, the quality of the data that you have, because then that allows you to kind of do your ongoing, you know, enhanced due diligence and those type of things. I think definitely here within the UAE, we're lucky to be able to leverage off, you know, things like the Emirates ID cards and, you know, the ability to kind of have access to greater information. I mean, that's the name of the game, is access to information, access to high quality information, how it is that you can record and retain it, and then how do you use that information? You know, because whether it's digitalization on an ID front, or whether it's kind of you wanted to adopt kind of more behavior analysis as to, what are your risky customers? How does that risk change through the life cycle of a customer as well? They're all kind of obviously interlocking and relevant pieces, and anywhere that we can try to leverage, a digital channel, a verification direct from the source of the information, an API from a licensing authority, the push obviously now for public registers and being able to ingest that information. And then in support of that, obviously, all the third-party vendors that are available that can actually help you. And that for a financial institution, and as a compliance kind of expert as well, you don't necessarily understand all the strengths and weaknesses of the various vendors. And so you have to actually get into the nuts and bolts of it. I'll try to cut it short, and hopefully there'll be the other questions for me. But I think, the first thing is actually taking a stock take. I mean, it's with all the vendors, you'll never be able to kind of just pull one off the shelf. You'll have to be able to automate it. So you need to understand, where are the things that you want to enhance? Whether it's specifically on the C2D element, is it about the verification of the documents? Is it about how you be able to store and analyze information? It's something as simple as, do you have a system that can track where the expiry dates are, or are you having to manually do that? So all those types of things are a challenge. And as you interface with either it's the vendors or the providers of this information, there's always a bit of a deciphering element. I mean, you're speaking to kind of technical experts, data scientists, and they have all the websites, but you're looking at it from a compliance perspective, and to be able to kind of, decipher and work out where it is that you need to be, and then that needs to be converted back to the business as well. So, it's challenging, but there's obviously a lot of opportunities as well.
Okay, let me just give you one question on that, Mike, and I'll make this to the audience too. If you have questions, please feel free to send them in. Let us know to which of the speakers that you want us to put the question, and I'll put that out to them. So you are welcome to ask the questions. We want to make this interactive with the audience. Mike, one thing I want to ask you quickly, and I'll switch back to Salman on the KYC. What is some of the areas where would you need more help? Where can the regulator help more in the development, particularly around digital onboarding? What are the kind of things that the industry would get help to hear from us?
I mean, I think from a regulator's perspective, obviously the recent joint guidance has been very useful in terms of kind of being able to at least bring this onto the radar of kind of financial institutions. As I said, it's not something that I think a financial institution would be looking at purely because of COVID. It would have been part of their kind of aspirational kind of roadmaps in terms of what they're trying to do. But it does become, very reassuring for us that there is guidance out there that says, hey, there are digital kind of initiatives out there, and you're able to do that. I think it's a situation where each of the financial institutions will have their own different risk appetites, perceived weaknesses or strengths. And so I guess, for regulators being able to, be available for the financial institutions to actually engage with them and say, this is what we're doing. The regulators themselves, obviously, you can't bring them in too early, but you don't want to bring them in too late either. There will be expectations where, if you're building models or statistical analysis that, you're independently verifying them, but then having that opportunity to present them to regulators. And I think a forum like this is obviously signaling that intention from the regulators to be open to it. When you get into, the specifics, of, ID cards, for example, obviously it is kind of more welcomed, and there are forums maybe potentially like the UBF or other kind of DFSA kind of compliance officers forums where, we need to be open, and regulators need to be open to kind of have these kind of frank and open discussions as we kind of work through them. Because I think it's one thing to say, yes, we've got a digital ID card, but when you get into the nuances of it, examining, what happens if there's a missing data field? What name should we be using for screening? Is it the name on the ID card, which can oftentimes change when people are renewing them? Those are the types of things I think from a practical perspective as well. Regulators need to be open to have those discussions, and sometimes on a kind of communal basis as well.
Okay, thanks for that. It's interesting. Again, the engagement between the regulators and the business always has to happen. And two, I think an important point like that you made, you have to be mindful of your risk appetite. I think a lot of times firms, it's not always just the regulatory side. We put out the requirements, but what is your own appetite within that? But Lawrence, if I could grab you for just a second. on the regulator's role in this. In regards to the joint statement, the general premise of the statement, the supporting innovation, is that something that firms should expect? That's a reaction to just COVID-19, and that's a temporary position, or what is the longer term view? Where do we go as regulators with the joint statement?
I think just following on what Michael said as well is that it's really clear that for a number of years now, FATF have been also putting a lot of priority and encouragement to governments and countries to focus on innovation. And I think if there was any indirect benefit from the COVID times, it's been that there's been more focus and need, practical need, just to start looking at automation, looking at more digital sort of means to do business in the face of not being able to meet customers and remote working models. So in some ways, this has just sped things up, and very much the joint AML guidance statement really highlights the various authorities' views that we very much see this as an ongoing basis, the adoption of alternate and non-traditional means. Obviously, as regulators, we will also engage with our financial institutions and firms, and so there'll be more dialogue and better understanding, and hopefully more awareness of the different types of products in the marketplace.
Okay, and when we're making these decisions and coming up with the policy, Lawrence, how insular are we in doing this? What's the level of collaboration? This is a question coming from the audience. What is the level of collaboration that exists, particularly with the FCA, the PRA, and other UK bodies?
That's another good question. Obviously, we prioritise a lot of our engagement with our domestic regulators, but also we always have been very close to all our other international regulators. Obviously, Ken, you're aware through the fintech work and that we collaborate and liaise with a lot of other authorities based in the UK, Singapore, and other jurisdictions which are leading very much in this space as well. And so, look, yes, we will look to leverage off all our networks, whether they're domestic or international, to see whether we can create more consistency. And I think that's really the key issue that we hear from our institutions, is that they're looking for more consistency even amongst the regulators, just in terms of their approach and views on things. And so the more we can engage with other regulators, and the more that we can be on the same page.
Okay, great. There is now quite a stream of questions coming in for everyone. There's quite a few on EKYC. So let me go back to Salman for a moment, because you wanted to add on to some of your comments and talk a little bit more deeply about the program and Norblock in particular. So go ahead.
Yeah, I want to pull Asianax and Norblock back into the conversation on to provide a little bit of context on where this is heading and what the enablers are. So I talked earlier about the development of our capabilities, from traditional to kind of fintech to kind of the digitization, and I think our agenda now collectively is to drive the future of finance from here, from the DIFC, from Dubai, for the region. Now, naturally, given the demographic makeup of the markets that our clients serve, i.e. Middle East, Africa, South Asia, there is tremendous opportunity. Part of that is, in trying to do that, we've spoken to, including Norblock, obviously, leading companies in the world on what it would take to drive this kind of economic growth in the innovation space. And one of the key things, obviously, was to enable at scale not just a faster, but a better onboarding process. And so with that context, I think the journey with Norblock has been a good one. What I want to do is, without repeating some of the details of Asianax's conversation, I think it's worth talking through a little bit about kind of the journey quickly and how it's evolved. Now, Asianax, can you hear me okay?
Yes, I'm on.
Super. So you did a really nice job of obviously outlining how the solution works. I guess my first question, maybe for the benefit of the audience, is maybe a little bit of context as to how it happened, and what was it about the environment, maybe in the DIFC, that enabled you to kind of set the business up. And once we get through that, I'm keen on talking about what's next, particularly when it comes to scale.
Mm-hmm. Of course. So actually, we, as we mentioned before, we joined the first class of FinTech Hive back in 2017. And by doing so, we were exposed to all major institutions, financial institutions in UAE, some of them global institutions as well, such as Citi, Standard Chartered, HSBC, but also DFSA. Actually, anecdotally, I can tell you that part of the functionalities we have were designed according to guidance from DFSA during the meetings that we had. So what we saw, and that's what we're focusing on right now, when we talk about onboarding, it's not just onboarding on DIFC, it's not just onboarding on a bank. If you want to start a company somewhere, you want to onboard all these different parts. You want to go through this journey, which the entirety of it is called onboarding. So when we're discussing with DIFC, the key thing that we saw there is that there's a lot of potential for someone to essentially register digitally in DIFC, but then immediately open a bank account, which is the logical next step for someone to start operating, and to do this in a seamless fashion. And this is where our platform Feedus created a lot of value, and it's currently implemented. The aspiration now, going wider, if you look at this, it's actually for a UAE ecosystem. I mean, this is an ecosystem that has very strong network effects. The more participants you have in an ecosystem, the more valuable it becomes to its participants. So we do, and we're fully aligned with DFC on that, correct me if I'm wrong, Saman, on the aspiration for a UAE-wide ecosystem on this basis.
Yeah, so one of the things, Ken and Lawrence and Michael, the reason why I think this particular example is poignant is because it does two things. One is it brings together in a perfect way the concept of client and market feedback into the, with the regulator and the authority in a way that makes sense. The other thing that I think is really important is Brian and Lawrence have talked about the importance of connectivity with UAE and Dubai institutions, whether it's the UAE Central Bank or others. And I think this context is very important because the aspiration is to really move to scale. One of the things I am allowed to say is that we are in the process, I can't reveal details, we're in the process of talking with several UAE entities to talk about a significant scaling up of this platform. And I think when you get that, you will get a situation where it's not just about shaving a few seconds off of an onboarding cycle. It's something much more. It's value additive, it's better, and it's value additive for all the participants. Asyanak, do you want to just outline a little bit of a couple of features that we had discussed in terms of the scaling, maybe?
Yes, so actually in terms of the scaling, apart from the different, we've started with DFC and Maastricht, but clearly there are other organizations that basically are onshore. There are other free zones, there are onshore entities, there are other banks, there are other governmental entities. The moment as a customer, I can have a view of where my data sits across these banks and licensing authorities, and I can share data between them, but also with other obliged entities or even my trade partners, my business partners, suppliers. Everything essentially becomes seamless. And there's one, which is something very important for the regulators actually in this panel, there is one version of truth, and there's an auditable way of how we derived and how we came to that one version of truth. And I think these are really powerful in an ecosystem that we want it to be compliant, but also business friendly. And these two things, what we found out from Norblock is that they go hand in hand. When people think that compliance is actually a pain, and it stifles the customer experience, that's not actually how it should be. I think there are many ways that you can actually put the two together and they can work concurrently and hand in hand. And that's what we're trying to do with what we build.
Yeah.
There's a question from the audience I think fits in with that for Lawrence. Can regulators help by providing credibility assessments for documents used in ID and verification in different country institutions to support a consistent standard across countries?
So yeah, it's I guess it's very early stages, at least for us, in terms of our discussions around what sort of types of things that we feel comfortable with. But it's definitely, I guess I see something that has to happen over time. The more that we're exposed as authorities to what processes are happening, then it's easier. Obviously, in the DIFC, we've seen a few firms slowly starting to adopt digital sort of processes, but it still will take some time for us as we conduct assessments of those institutions to better understand how it's been done, and then try to find areas of commonality, and then discuss that with the other authorities to make sure that we can then provide some more helpful guidance or information around particular aspects of the documentation.
Okay. Let me take a look. So we get a stream of questions. All right, there's a GDPR question, follow on to some of your earlier comments, specifically to SDNX. The data processing under GDPR is more than just storing. It includes transmitting and even accessing. Has there been an equivalent of a data privacy impact assessment that's been done, and is it available for review?
Yes, there has been, and it is available for review. And by the way, something I need to clear up here. Norblock is a data processor in the network, not a controller, and we don't store any data. The data is stored as it's stored today in banks. We just provide the piping. I mean, really, my introduction about piping is really what it is that we do.
Okay. Salman, same question to you.
Well, actually, I think it's the same question I see in the chat. I think it has to do with greatest challenges when targeting scale digitization. Look, a couple of thoughts, right? Brian mentioned upfront, I think this was very important, that the DFSA and the DIFC have always been technology agnostic. So one of the challenges of scaling is neither committing to any one particular platform technology, particularly when the answer and the needs keep changing, right? So that's number one. And number two, it's that classic mix of top-down and bottoms-up. Look, emerging markets growth has always been about top-down guidance, but for innovation like this, you almost don't want to overregulate, right? And you want to kind of see what problems emerge for a particular region and what types of solutions are best suited to answer it. So in that situation, the balance is not to overcommit to any one particular technology or way of answering the problems. And I think the eKYC platform that's envisioned, right? The ultimate answer may be some kind of UAE-wide or regional standard, right? A standard, but it's not a given as to what underlying technology will be there. But I think the competition for ideas is really, really important. So the short answer to this question is I think to be flexible, to continue to talk to people who know what they're talking about, i.e. our entrepreneurs, our clients, and to keep that dialogue open.
Okay. All right. Let's see. We have a few minutes left, so let me try and get through a couple others. There is one question that we can open this up to across the panel, but I think probably Michael give a stab at this one first. KYC is only a part of CDD. How does the panel see the blend of digital and broader CDD? Is it the Norblock model?
I might start and potentially give my views on it. I think that there are going to be various models, various digital solutions, and we've had presenters kind of present on that, and it will be up to financial institutions to kind of find the right model, whether it's a kind of a hybrid between what they currently have internally and how they can leverage maybe some of the solutions and they get built into the back end of their current solutions. I mean, but when we're talking about kind of CDD, it isn't just a passport, it isn't just an ID card. The CDD is all about information, and your ability to try and kind of access that information, potentially with the less interaction from the customers or on a consent regime, being able to leverage things like APIs to licensing authorities, entities that may have to kind of register VAT returns or lodge economic substance reviews. I mean, as a financial institution, that's information for me. And if I'm able to kind of access that either directly or otherwise, that does build my kind of my CDD on the customer. It then feeds on to my kind of ongoing risk assessment. The more information that I have, and the weightage up. I mean, I think it's important to say kind of, obviously there are core components within CDD, things like the identification documents and those type of things. But then there are other things. You're looking at kind of the area of source of wealth. You can try to leverage, other means whether it's a VAT return or potentially kind of public information that the company has on its website. I mean, it builds on the weight of evidence. You wouldn't say that, singly, checking on a company's website would give you the 100% answer to what a customer's source of wealth is. But as you start to build that picture, and then the more you can automate it, the more we can kind of get this information, as I said, directly from the source. That does build into a stronger kind of CDD kind of picture of your customer. And then you need to have a lifecycle management system, or a kind of an area where your CDD is going to be not just stored away as a photocopy, but is actually kind of, because it's been digitalized, that you're able to kind of run searches. You're able to kind of see which customers you have in which segments, and that will then help inform your risk appetite as well. So it's all interconnected, and you've got these little components which you might be able to get from one vendor, other vendors. You might do it in-house, but it all starts to kind of build this ecosystem, which is risk assessment. Are you determining the right level of CDD that you need to do? I mean, the joint guidance is very clear on that, and we all know that, for the risk-based approach, we do more for the high risk and less for, those who are low risk. But if you don't have your kind of risk assessment calibrated correctly, which you need the customer information on to do, you're never going to get there. So I think it is definitely not just a matter of kind of the threshold you need to meet at onboarding a customer, but the complete life cycle of the customer. I'm not sure if that answers the question.
I was just going to add that obviously the KYC part and some of the digital solutions will clearly help financial institutions allocate resources to the other parts of the CDD process. So obviously, if there are efficiencies that can be done there, then institutions can really focus on where the key anti-money laundering risks and terrorist financing risks are. And so, and that's very critical. And all the results and surveys tell us that if less time can be spent on that KYC and still getting the right output, then other parts of the money laundering risks can be focused on by institutions.
If I could just add one comment before giving maybe Astyanax the last word on this, as our only technologist on the panelist. To me, again, the holy grail in this area is to continue to introduce more intelligence into this process. So it's not just about making it digital, which is a necessary condition, I think, absolutely, bar none. I think the key is to start to see both in the KYC, the AML process, a lot more intelligence. And once you start to do that, I mean, you see it today, obviously. You see it today with Onfido in optical character recognition. You see it with our friends at Norblock as well. But to me, that, the introduction and the augmentation of machine learning into this process, to me, is really very, very exciting.
Astyanax, Salman put you on the spot for that. Do you want to have a last word on this one?
So basically, just some few words for me. So there is not a Norblock model. I mean, we heard from different vendors today, including ourselves, that basically all the solutions that we saw can work together. All solutions are viable. They can basically offer something to each operation, to each bank that uses them. Whether you actually work within a bank, you're going to use all these different platforms that we saw today, from Onfido, Fenergo, etc., to basically make better decisions when it comes to the KYC rating. Whether you're going to start sharing validated information at the request of the client between institutions, again, this is something that it will increase and provide tremendous efficiencies. But nevertheless, I think we're definitely moving towards that direction, because the KYC burden is becoming bigger as we move forward. And there is increasing focus on KYC, but at the same time, we should not actually discount the fact that organizations, apart from technology, they have to have the managerial mandate and regulations and appetite of employees within the company to basically perform all these compliance tasks. Technology by itself will not solve the problem. Will make things easier as long as there is will within the organization to face all the compliance challenges.
Yeah, I think that's a very good point to end on. We've run out of time with this session, unfortunately, and there are a lot more questions that have come in. But one particular theme I did see across a couple carries on to that point. What happens to compliance with more digitization? And Lawrence had mentioned this. It's a redeployment of those skills. And as Astyanax points out, the technology just aids; it doesn't replace. So you can give a machine a person's job, but the person still has to make sure that machine does the job. Now, whether that reduces numbers, that's another thing, but compliance doesn't go away. You still need the human element. And as regulators, we don't ever want to see that the human is taken out of the equation completely. And everything is done in a risk-based approach. So where you're doing a lot of tasks now that a computer can do, that you can refocus your energy elsewhere. And that's our view. If any, Michael, from the private side, maybe if you have a perspective on that for a quick 30 seconds.
Oh yeah, I mean, it's the compliance role will never go away, but we will have to take on different lenses, and you know, in able to kind of be able to kind of sometimes decipher what is the kind of the technology is going to provide you, and be able to kind of decipher that and work it out into what your own risk appetite is, or what the regulatory requirements are. You know, that kind of deciphering, and that's going to come down to compliance. And even, you know, from my experience, I mean, as you bring on these kind of digital solutions, they aren't all plug and play. There are going to be little nuances that you need to look at. What is it that you're actually relying upon? You know, for example, when you get the Emirates ID card, it isn't just merely to verify the individual, but there's all these subsets of the data that you're using that you may use for your payment screening, your transaction monitoring, sanction screening. And then you have to actually then work out, well, how reliable is that? Is it retrievable in the current kind of format? Yeah, it just kind of changes the lens, I think, of what compliance needs to do. I mean, in essence, we're in-house regulators, and so the same things that will concern you, you know, as compliance practitioners, they keep us up at night as well.
Okay, everyone, thanks for that. We have run out of time, so I want to thank everyone for the participation and for all of the speakers and demonstrators early on. And I would say, please join me in a round of applause, but maybe just the panelists that are on now. So thanks, everyone. To the audience, we'll have a couple closing remarks coming up from our Managing Director of Supervision, DFSA. Before he does that, I just want to let you know there will be a survey at the end when we close the session. If you'd be so kind as answer those questions for us, we would like to know what you thought of this session today, if this was helpful, and if you would like to hear this again. There is another session tomorrow. Get questions after that one as well. Please let us know your thoughts. Now, we just invite in Justin Baldacano, our Managing Director for Supervision, to give a couple of final thoughts on the day.
Thank you, Ken. Thanks everyone for joining. I think that was a fantastic day with some amazing RegTech firms. So I'd like to thank everyone who spoke today, and thanks for making the time. I think back to Brian's points, I think the good thing and the bad things about COVID is the fact that this RegTech event was supposed to take place face-to-face. Unfortunately, with the challenges in place at the moment due to the crisis, the great thing is we've been able to do this fully remote. So we've got pretty much the whole team working fully remote. We have all the speakers speaking safely from their home. And it's a great opportunity for everyone to get together, share their thoughts and find out so much about the firms that are out there and the capabilities and the opportunities that are there as well. So from my perspective, it's a great learning opportunity to see what is on offer, what are the opportunities, what are the risks as well. So with all these new technologies, we understand that there's great efficiencies that we've heard from many of the speakers, great capabilities in regards to workflow tools, and also the ability to get more and more data. But as we've seen from a KYC perspective, the other challenge is also getting the right information from the very start. Most institutions that we regulate today and that will continue to regulate in the future, the biggest challenge they have is ensuring that they've got the right information from the very start, and that continues on into the future as well. So I had a great, fantastic, and I hope you had a great day today as a day one perspective. We've had over 600 people register for the event itself. So that's a great outcome for us, given that it's the first time that we've done a fully remote event. And we'll continue to do this into the future. We look forward to having you all back for day two, and look forward to all your questions as well. So again, like to thank all the speakers and for all the firms that have joined us today. And we look forward to the further inputs from everyone else tomorrow as well. So thank you, everyone. Take care, and we'll hopefully see you tomorrow. Thanks, Ken.